Hello everybody, Tortoise Investing coming at you today with 5 semiconductor stocks that we are going to be taking a look at today. Yesterday, NASDAQ was down almost 3%, the S&P was down 1.4%. Big red day, a lot of semiconductors are down double digits. So, we're going to be taking a look at 5 of them, let you know my thoughts on them. If you're new, please hit that subscribe button for me. Drop a like down below. It helps the channel and the videos out a ton. I greatly appreciate it. None of this financial advice. I was doing research for investing. And before we dive into the semiconductor stocks, we're going to take a quick look at my portfolio. This is my portfolio setup. Share count, average buy-ins. You can see the percentages. Yeah, I'm down big in Celsius. Oh no. I'm going to add more. That is my game plan. I felt bad that I missed out on stock when it was in the 90s. It dropped down to the 70s. I was like, I think I can, wait a little bit and get in there a little bit cheaper. Hit 60s. Started buying. Now it's in the 50s. And I intend to continue buying and building my share count. Starbucks is another one I want to increase my share count with. And also MasterCard. I'm up pretty big on United Health and Salesforce. So with those, I'm just going to be patient with. Now, the semiconductors, Nvidia, the big dog on the porch, over 3 trillion market cap, down over 6% yesterday, 117.99. Just free cash flow yield 1.22%, just the smallest dividend in the world. It takes up 0.9% of their payout. Is 0.9% of their payout ratio. Blah. So Nvidia up 144% this year, up 150.6 over the last 1 year. 5 years, 2,700%. Over the last 10 years, 25,000. Whoa! Good Lord, it has been on a run and a half. They did a 10-to-1 stock split. So it's down to where it is, but this thing was. Where was this thing at one point? Let's see. Yeah, over the last month, we're down almost 10%. This thing was 135 at one point. We are now down to 117.99. And I know TSM is reporting their earnings today, and if they also give us off guidance, you might see another big red day, and you might see a lot of these down even more. I know ASML had their earnings, and it was soft guidance, and it brought down everything else with it. So revenue, as you can see, it's just crazily up and to the right. Same thing with revenue by segment. Annually. Oh, that was quarterly too. Look how nuts this is quarterly. But as you see annually, you just got this massive spike from 2024. I think we'll keep it on quarterly for right now. As you see, EPS is just taking off. Free cash flow is just taking off. Shares outstanding. They're not really buying back any, but can you blame them? It's really expensive right now. And cash on hand, $31.44 billion. Debt is $8 billion. Now we will take a glance at the return on capital employed. Almost 60%. That's pretty ridiculous. EPS average for 2025 is 259, growing to 352 from 2025 to 2026. And revenue, 120, growing to 161. That is in billions. So they're still expecting double-digit growth out of it. Nvidia, my personal thoughts on it. I think it's still a little bit too high, but it's getting there. I know what I'm getting with this. They have a huge moat. And the way that they set up their chips, they got their own server racks, like that is special to their specific chip. So if this continues to drop further, absolutely going to have my eyes on it. It's Nvidia. They've been on a crazy run, and if they have a massive pullback, I think I personally would be okay jumping into them. What is that pullback though? I'd like to see this below 100. Next up, Broadcom, another one that I love. down almost 8%, 155.98. 788 billion market cap, 1.35 dividend yield, and 87% payout ratio. Again, quarterly, you can just see things are just taking off with the revenue, free cash flow. They've had a little bit of pullback in their EPS and their net income, though. And after that stock split, because they also did a 1 to 10 stock split, that's the reason the dividend did what it did there. But their debt, $71.57 billion. What is their EBITDA last year? 20.8. So I don't like that. See, I don't like that. It's a lot of debt. My personal opinion, I don't like stocks that have more than 3 times their EBITDA in debt. That shows if something major was to happen, they were needing to take out debt. It's going to hit them a little bit harder. It's going to be a little bit harder for them to maintain that balance sheet. And share count is increasing here as well. So, I mean, it looks good. I know it's the big thing that left SCHD that made a lot of people upset, but yeah, that debt is massive. That's new debt too, so don't know exactly what that's about. Gonna have to be something I'm gonna have to dive a little bit deeper into, do some research on, see what's going on there. That's a lot. EPS average 235, grown to 371 for 2024-2025. So it's some really rapid growth there. And revenue 42.62, grown to 59.95. Again, it is double-digit growth in that department as well. Broadcom. I personally probably not going to be diving into them. We'll take a look at their performance here year to date. 43%, 1 year 73, 5 years 437. So they're also up massively. The debt's an issue for me, and I do feel like their payout ratio with their EPS is a little bit high. But again, you never know if these things, they could just turn around and have an amazing quarter and then everything's perfectly fine again. But with the debt situation, stuff going on, the share dilution, it's a pass for me. Next up is AMD, another one that's down over 10%, 286 billion market cap. Let's take a look at their performance over the last year. 15%, 1 year 36.93, over the last 5, 390%. So again, you see quarter over quarter, things are ticking in the right direction. Let's take a look, see how everything looks annually. Yep, it's a nice little growth here and there. The EPS has dropped off. This is what completely just gets AMD off my list, is this shares outstanding. They dilute like crazy. Look at this. This is, no, I stay away. This is a big red flag. This is nope. This is crazy dilution. 2020, 1.21 billion shares outstanding, increasing to 1.63. That is a lot of share dilution. I mean, look at Nvidia, hasn't done that. AVGO has not done that. But yeah, this, I don't even have to look at anything else, even though the free cash flow and the lower net income and EPS and all these are red flags. This just completely is just a no for me. 349 to 338 with its EPS. 25.53 billion to 32.7 billion for its revenue. But yeah, that. Next up, Taiwan Semiconductor Manufacturing, TSM, the ones that have the earnings today. Let's take a look at them. 964 billion market cap, year to date 68%, 1 year 66%, 5 years 290.6%. Dividend yields 1.32%. EPS, think that's a discrepancy there. Yeah, that's not 278%. It's crazy. So let's take a look here. Things are looking good. Revenue, free cash flow looks good. Shares outstanding isn't absolutely crazy. Their debt to cash is good. They have almost $58 billion in cash, $29 billion in debt, so that's not an issue there whatsoever. Revenue, 13% over the last 10 years. Free cash flow, 17% over the last 10 years. EPS, 16% over the last 10 years. So a lot of things are ticking in the right direction. I like what I see here. Again, they're not diluting the shareholders. Return on capital employed is almost 20%. So I like them. Yeah, they're up a lot, almost 70% year to date. But this is another one. If it was to have a massive pullback, probably the 140s, 130s, because it's not a U.S. company, so I would want a little bit more margin of safety there. Definitely would be one that I would be taking a deeper look at for sure. Next up, ASML, the big one, down almost 13%. They issued a soft guidance for Q3. $423 billion market cap, 0.62 dividend yield, and a payout ratio just below 24%. So yeah, this one had a big drop and may very well have an even bigger drop if TSM comes out with a soft guidance, and you might see another sea of red in the chip sector today. So let's take a look here. Year to date, 30%. 1 year, 30%. Over the last 5 years, 316%. This thing got as low as the 300s there at one point. Oh, if only. Revenue, 18% over the last 10 years. Net bookings look like this is going down, so that is slightly concerning. The debt, they have more cash than debt on hand, so it's not an issue. Free cash flow's kind of everywhere. EPS growing 21% over the last 10 years. Cash is 7.66. Debt is 4.86. That's now updated 5.9, and debt is just over $5 billion. Shares outstanding are decreasing. I love that. Do that more, especially if you're going through a dip. If this dips any further, I would love they bought back more shares. And return on capital employed looks very, very good. Now they do have a growing dividend, 8.46%, 42% over the last 10 years. As you see, it's kind of a little bit everywhere, but not an issue. I think they pay twice looks like they pay quarterly. But yeah, ASML, that's another one that I've been taking a look at. I've tried to dive into and understand the business a little bit better, because what they do is, it's something you're going to have to look up. They got these specialized multi-$100 million machines that help with these chips. And it's like engravings and stuff that's needed for them. And they're one of the only companies that do it. So, I mean, the mode is there. EPS 20.46 growing to 30.45. So that is crazy growth. And the revenue, $32.61 billion grown to $39.7 billion. So again, crazy growth there as well. So ASML, one I'm going to be keeping on my radar. Going to have to do a little bit more research and stuff into it. Love to see this thing hit below 800. TSM, like I said, 130s areas where I'm going to be taking another look at it. AMD, get out of here. Broadcom. Got to figure out that debt situation that you got going on there and see if you can get this payout ratio a little bit more under control. And Nvidia, I would love to see below 100. Let me know, do you own any of these? Let me know down below. I'd love to hear from you. Make sure to hit that like and subscribe button for more. Until next time, take care. See yins.